guys, today I'm gonna show you how my daily process are, and I'm gonna show you how I apply my setups in multiple markets by analyzing them. So first of all, at the start of the week I look at the Dixie chart and I look at the market structure. I noted up in here like a daily up. So when I look at the Dixie chart, I just check it out the weekly chart first of all. Then I saw that we are bullish in the Dixie, we are bullish in the weekly chart. So Dixie is bullish. I go to the daily chart, I mark up the market structure high and the market structure low. There is no swing high formed yet, but we broke the structure, so when there's a swing high, I'm gonna update this market structure high as well. Then I just mark up my daily zones, like this daily order block, and I'm gonna mark my daily fair value gaps as well, but there is a multiple of them, so I don't like to mark all of them, and I just keep the daily order block here, and I'm gonna just observe there when price comes there. I'm just gonna observe them. Then I do the same thing for the 4 hour and 1 hour chart as well. Then I go to the 4 hour chart. Then I saw that there is one order block that I would like to execute inside of it. So, and there's a fair value gap that I would like to execute inside of it. So when there's a situation like that, we have the 4 hour range in here, market structure or market structure. I just mark them inside internal liquidity low, this inside low. Okay, I just mark up this inside low, then I wait for an ATM setup to occur inside the fair value gap or inside the order block. We can create a new low and create a new rate in here inside of it, and it's applicable. It's appropriate for me to take it as well. Now I go to the 1 hour chart and I look at this structure like this. This is the market structure low. This is the market structure high. Currently we broke this high because of it. So I mark this order block, but as you see, this order block is not able to hold the price or create a strong momentum to the upside. So I'm not gonna execute inside of it. But there is a market structure low, 1 hour market structure low, which is also for our swing low, which is also for our internal low. So if you rate this market structure low, it will be better for me to take it rather than just taking some random low. But this is a market structure low on 1 hour, so it's better for me to use ATM setups in here. So I just mark my brush tool like here. I just draw this and leave it just to not forget what I was looking for it. So I just go to the other charts, like this is Euro GBP, sorry, Euro GBP. So when I look at this, I first of all look at the daily. So as you see, we rated this market structure low, so this is now a daily ranging market. I'd like to see that it forms a swing low before, so I need a third candle to confirm that this is a ranging market, but I'm just gonna note it here. When there's a ranging market, I look at the market as premium and discount, so this structure low will be my low of the range, and this market structure I will be the high of the range. So I'm gonna focus on this 50 below the 50% for premiums, for discounts, and above the 50% for premiums. And I close this, and yes, I'm just gonna keep this like this. Then I go to the 4 hour, I do the same things. I look at that. Now we were in a expansion market, then it become a reversal market. Now if it fails to create a new expansion like this, then it will be a ranging market as well. If it able to break it, now it will be an expansion market, and we will hopefully continue lower. So now it's not clear that what is gonna do. I'm just gonna mark this order block like this, but this is too wide in terms of the range of the market structure. So I'm not gonna mark it up on the 4 hour. I'm just gonna mark it up on the 1 hour chart. I go to the 1 hour chart. As you see, there is no clear order blocks. You can use this order blocks, but I like to use the order block that are able to create market structure break, which this is the low or formal low, which we need to see that it breaks it. But as you see, this order block is not able to break this market structure without an interruption of any other up close candle, like in this one and this one. There's a swing high as well. So this is not a strong one. I'm not gonna mark this up. I'm not gonna use it for my setups. I can use the 4 hour 4 hour structure levels for my setups, like taking a high of it. But due to we're in a daily ranging market now, I don't like to short inside the discount. Okay, very discounted price we're currently in, so I don't like to short it here. So I go to the 1 hour chart, I do the same thing. I mark up the market structure high, market structure low, then the order blocks inside of it, or fair value gaps if there's any. And as you see, this is an order block that has no fair value gaps before it, and price already mitigated this order block, so I'm not going to use this order block for my dive setups. As you remember, dive setups are the exact setups that are straight, that has straight entries inside the order blocks. Like, the order block has to have fair value gaps, but as you see, there is none currently. And I would like to use this order block in 15 minutes inside this 1 hour order block, because there's a fair value gap in it, and it was able to break the structure without interruption. But as you see, it's already used for one time, and price is chopping here. And so when day starts, I'm not gonna take it in London session, this order block. I'm not gonna use it. Currently, I'm gonna look for an ATM setups, preferably at the market structure low or at this internal low. But I don't like to use these internal lows. I would like to I would much rather seeing this market structure low to be rated. Then I go to the other setups, other markets like Euro USD. I start to mark it up from the daily chart. As you see, this is the daily range. We have this high, this low. I open this because this is a ranging market. I mark it like with the Fibonacci, and I look at for premium and discounts. Now we are in discount, so I just mark these up, and this will act like a support, a resistance zone. This is a mitigation. After this high taken, it breaks the structure, so I'm just keeping in mind. So then I go to the 4 hour chart. I would like to use this order block if it weren't interrupted by an up close candle. As you see, this is an up close candle that interrupts this market structure move, market structure breaking move. This candle so is not able to break the market structure without interruption, so I'm not going to use this order block. I would like to use this candle as an order block, but high of the order block is just taken, so this is now invalid. So I go to the 1 hour chart. I do the same thing. As you see, we have an order block right here on the 1 hour chart. So I would use this order block if it were clean, but I would like to use order blocks that creates the origin of the move. So it has to be up last candle of the swing guy, or it has to break the structure very cleanly. Currently we have not, it's not breaking very cleanly, and the order block is already tested, so I'm not going to use it for dive setup. So I'm just waiting here to be executed at the market structure high if it rates. Also, I forgot to mention that we are in a 4 hour ranging market as well, so when market dips into this market structure high, it will also be inside the premium of 4 hour market structure. So if there were a fair value gap, I would like to take it into it, but there is none, or there's clear order block, so I'm not going to mark anything else rather than the market structure high and low with the Fibonacci to see where is the premium and where is the discount. And I go to the pound USD. I look at the market structure like that. I always note that, and it broke the structure currently, so it's now a down market. Before this day, it was a ranging market because it wasn't able to break the structure. It was, even though it was slowly moving to the lower side. Now it broke it. Now it's at the expansion phase. Also, it broke the structure at the 4 hours, so it's in the expansion phase as well. As you see, there is a clear order block that was able to break the structure without interruption of any up close candle. So I mark this order block, and afterwards I mark this fair value gap. Sorry for the alarms. I mark up this order block and this fair value gap. Now I would like to see an ATM setup inside of this fair value gap and order block. And if we go to the 1 hour market structure, as you see that we can use this market structure as well. So if there was an order block here, I would like to use it for dive setups, but we can also use the 4 hour order blocks as our dive setups with 1 hour refinement. When I mark this 4 hour order block, I go to the 1 hour chart and see there if there's a clear order block that breaks the structure, and there is one, as you see. This would be my order block that I would like to use for dive setups, which means that price when dives into it, I'm gonna have straight entry and put my stop loss to the high of it. But there's this problem in this one. I always put my stop loss to the high of the structure because this is a 4-hour order block and 4-hour trade. I use the 4-hour market structure high to put my stop loss. And also, this order block is not located at the very close of the origin of the 4-hour range. I'm not gonna use this order block because price has more probability of just wicking into it and continuing lower. So if this order block like this much clean was located in here, I would have straight entries at there. But now it is a little bit far from the origin of the 4-hour market structure range. I'm not gonna take it, but I'm just gonna keep it here to see that if it was able to hold the price. So as you see, there's an order block here. You can mark this up as well. But as you see, this is an order block that wasn't able to break the structure very cleanly. Even though there is no up close candle, these are the choppiness inside of the range of this order block. So I don't like to use these kind of order blocks, but I'm just gonna keep that in mind. Also, we have a 50-minute market structure, 50-minute QM fractal here. As you see, so this is an order block that is usable. That is still usable, but it is too close to the current price. So if price is not dips into it in Asia, I might take it in London session, but I don't like it while there's a fair value gap just above this level. So if it just makes this Asia, I can take it like that for London session. Okay, because this is an order block. Even though this doesn't have a very clear fair value gap, just right after it there is a fair value gap. Also, it was an order block of the QM fractal. Also, the 1 hour order block is not interrupted with any kind of up close candle while breaking the structure here. So this is still a valid order block for me. It is just not the highest quality because I'd like to see the engulfing candle like this one right after the order block creation. But even though this is still a clear order block, so I'm just gonna keep it. I'm just gonna put my alarm to there, and if it makes it in the if it makes this move in London, I can take it, and I'm just gonna note it. If it still stay fresh in London session, I can take it. Then I go to the USD CAD, and due to we have a daily ranging market in USD CAD. As you see, this is the range high, this is the range low. Due to we have a ranging market, I mark up the premium and discount with my Fibonacci. So then I saw that we are in now we are in the premium of it, and also price took the previous week's high. So it is a good place to short it, but as you see, the 4-hour range is against to the daily. Even though this is a 4-hour up close, this is a 4-hour ranging market. As you see, I noted everything in here just to not forget anything. And this is because of this is just a ranging market. I use the premium and discounts as well in this one, and I mark this low and this high. So this is there is a one order block in here, but it has very small body and there's a lots of wick in here. So I don't mark 4-hour level in here in this order block. Sorry, I have a trade. So I'm just mark this up on 1-hour chart. As you see, very clean order block, but I use this like a 4-hour zone. Because my clear 1-hour zone is here. We break the structure here, and we break the structure here again. Now this is a very clean order block, and I like to execute inside of it in this order block with my dive setups. As you see, there is a very clean body candle, and when there is a very small wick in 50-minute or 1-hour chart, what I usually do is I just mark the 50% of it like this Fibonacci tool, I mark the 50% of it, and as you see, this is crossing with the body of the 50-minute chart. So the 50% of the 1 hour candle's range and the body of the 50-minute candle is almost same. So then I add this 50% to my stop loss, and it will be something like that. If we have this trade still valid on London session or New York session, preferably, I'm gonna add to my stop loss, and I'm gonna target to 2.5 hour, like this one. But as you see, we are diving into this order block by taking this liquidity. I'm not really in favor of holding the price right to there. I might just reduce my stop loss a little bit and target 2.5 hour right here, right at the market structure low. This might be my plan. And also I would like to mention that we took the price, we took the high of the 4-hour market structure, then break this market structure in here, and due to we do that, we have a 4-hour QM fractal backing this trade idea as well. So as you see, the dive setup is now, this 1-hour dive setup is now aligned with the flow, and also we did our analysis by taking on the clean order blocks with fair value gaps, and now this setup is ready for me just to execute. I add this setup because when there's a small body of the order block, price might usually go to the high of that order block, but it continues to lower if everything is aligned with the flow. So I don't want to get stopped out just because of couple of pips, and I add it. And due to there's this very high likely of drawdown when there's a small body, I like to use the 50% of the range. You can add a little bit like this just to not miss the move. Then, and lastly, I look at USD Swiss franc in Forex. I also look at in gold, but I'm not gonna look at it today. And as you see, we have a daily ranging market, and also we are inside the premium, and we made a daily high rate. So I'm just marking everything up. Then I go to the 4-hour chart. As you see, this is the 4-hour range. We are in a ranging market in 4-hour, and we are also in a 4-hour premium. And I can mark this order block, but as you see, it's tested too much. I'm not gonna use this order block. I'm just gonna keep it as a zone that has a bearishness inside of it. Then I look at the 1-hour chart. As you see, we have a market structure break. This level was on daily rate, okay? Don't forget that. This level was a daily rate, and also we have a daily market structure, 1-hour market structure break, and this creates an origin. And this is also a setup, ATM setup of daily H1. So I just noted this as well here. This is a daily H1 setup. So when price comes into here, I can take that short. So let's mark our 1-hour level. This is the market structure high on 1-hour. This is the market structure low on 1-hour. And as you see, this is a very clean origin. And we can couple this with the dive setups. For example, if there's an ATM setup inside of it, I'm gonna definitely take it for shorts. But when price comes into this last candle, the last order block, this one, this is very clean order block. As you see, there's a fair value gap, very clean, just after the order block forms, and it breaks the structure without interruption. So it's a very clear order block. I will go to the 50-minute chart, and I'm gonna try to mark up the last up close candle, which will be the order block. And as you see, this is the order block, and it has a fair value gap right after it breaks the structure. And this is a structure. This is also a structure. It is breaking, but this is also a structure. It's breaking, and I don't. This is my favorite one because this is a market structure low that has the order blocks as well. So anyway, there is no interruption of this candle breaking the market structure. So I'm gonna refine my entry to this candle, and I'm gonna simply execute like that. I'm gonna simply put my stop loss to the high of the candle, and I'm gonna put my stop loss to the low of the candle. High of the candle, and I'm gonna put my entry to the low of the order block, like this one. And you can add a little bit pips just to be sure that you don't miss the move. And I'm gonna target 2.5 hour, but because of this is a very higher time frame setup, it comes from the daily setup. You can target 4-hour premiums, you can target 4-hour fair value gaps like this. As you see, there's a very huge inefficiency right there. You can target these, but always I take my partials at the levels of 2.5 hour and multiples of it, multiplies of it. For example, like 2.5 hour, 5 hour, 7.5 hour, and so on. So let's target 5 hour here. I'm gonna take most of my trades at this low if this happens. Okay, this is simply how I mark things up. Okay, I mark the 4 hours, dailies, and 1 hours inside the market structure ranges, and I use them when they're coupled with the flow. So if there's a very clean zone that is also able to use for dive setups and ATM setups, I'm gonna simply wait which one market unfolds for me. If there's a dive setup without touching here, I'm gonna take that dive setups by to short the market. Or if market comes here first, then maybe creates an ATM setups as well, then you can add to your trades. Okay, this is the simplest version of how I use my trading plan with the flow and by marking multiple markets. And thank you for watching.